You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again on the network for the Crypto Rundown, the program that goes a little bit outside our usual stomping grounds. I'm going to talk about, let's say, Apple or Tesla or VIX options or SPY options on this show. Go a little bit farther afield, explore what's going on in the world of crypto derivatives. Going to talk Bitcoin and ETH, maybe a smattering of some of the other altcoin out there. Going to talk about the volume, the volatility, the skew, the OI, the unusual activity, all that fun, and a whole bunch more. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever exciting, at least we tend to think so around these parts, Options Insider Radio Network. Remember, if you like what you hear, a lot of new people coming into the world of crypto through this show, and then, of course, exploring all the other offerings on the network as a result. Nearly a dozen shows waiting there for you. So if you're coming at us from the crypto angle and you're intrigued, maybe let's say you're options curious, you want to check out more, then wherever you're listening to this, could be iTunes, Audible, YouTube, wherever you get the show, make sure you upgrade to the full network. That'll get you every other show we put here on the network. And then, of course, if you want even more in your lives, and who can blame you these days? A lot of crazy things going on in the markets these days. Then theoptionsinsider.com/pro is the place to go. You're going to get pro Q&As every week. You're going to get options oddities every week out there. So 2 exclusive shows. If you go up there now, you have over 200 hours of exclusive content waiting for you the second you push that button. Live access to this, everything else we do throughout the week. And, of course, great giveaways. Just gave away our great Pro Trading Crate to one of our pro members last Friday for the month of May. Get your name in the hat for the June Pro Trading Crate and a whole bunch of other goodies. theoptionsinsider.com/pro is the place to go, because now it is time for us to go on into our first segment. It is time for the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody. Welcome to the Crypto Hot Seat, the portion of the program where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. Next up on the program is a newcomer to the program and indeed to the network. He is Jay Jogue, the co-founder of Sei Labs. Jay, welcome to the Crypto Rundown program.
Hey, Mark. Thanks for having me on, sir.
And Jay, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your backgrounds in the financial and crypto markets, as well as what it is you folks do over there at Sei Labs.
Of course. So great to meet you, everyone. My background is that I was raised in the San Francisco Bay Area. So I spent, most of my life in the Bay, was surrounded by technology the entire time. And because of that, I got into programming when I was, fairly young.
I think you're legally obligated to become a programmer if you grew up in the Bay Area, are you not?
Oh, 100%. Yeah, there's elementary school programs where kids learn how to code.
And also to dramatically overpay for housing. But that's a conversation for another day.
Yeah. Absolutely pros and cons to growing up here. But yeah, when I was in high school, I also got into speech and debate. And I actually met my co-founder while doing speech and debate back in high school. So did you do any debate back in the day, Mark?
I was in some youth and government programs way back in the day, but it's been a while.
Got it. Yeah, we used to have practice debates with other high schools. I met my co-founder from doing one of these practice debates. And ever since high school, which is over 10 years ago now, we just kept in touch. And then afterwards, I went off to college, studied computer science, and I ended up getting into crypto back in 2017. I don't know how closely you were following the crypto markets at that time, but it was just absolutely insane, right? And there were multiple things going on at the time. Obviously, the entire crypto, that was one of the earlier crypto bull markets. And that's close to when I was graduating. So a lot of my friends at the time that were actually graduating, they would take their entire signing bonuses. Back then, Facebook would be giving $100,000 signing bonuses to new grads. And they would literally plow that all in to different types of cryptocurrencies. And that was kind of the backdrop, the kind of initiation that I had into crypto. My friends were just going all into crypto, and it was just wow, this is absolutely insane. At the same time, my roommate at the time, he was going through Binance Labs. And as a result of that, I ended up working with him on a couple of different projects, actually being a builder in the space and building different things, right? And that was kind of my initial foray into crypto back in 2017. After that, I ended up spending 4 years at Robinhood, the Robinhood that I'm sure every listener on the show has heard of before. I spent almost 4 years over there, saw the company 10x, and I'm sure everyone remembers the GameStop saga from 2021. For anyone that maybe needs a refresher, that's when GameStop, AMC, and several other stocks were essentially just pumping to the moon, right? And it was this entire retail versus hedge fund kind of narrative where hedge funds were shorting these stocks, retail was buying up these stocks, which was leading to the price going up, and then hedge funds were being short squeezed. So it was a true Robinhood moment at the time where you're essentially taking money from the rich, giving it to the, middle class. And out of the blue one day, Robinhood just turned off buys entirely. And I don't know how involved you were with GameStop at the time, Mark, but it was just absolute pandemonium that specific day. I had so many people reach out to me that day, just asking yo, man, what the hell is going on inside Robinhood? Why did all the buys just get turned off? Because, understandably, any person that was holding a GameStop position was super frustrated with what Robinhood did, right? Because Robinhood just took out a lot of the buy demand, therefore the price started to fall. And it was just incredibly infuriating for anyone that was holding a GameStop position. My team was also asking me questions yo, why is this happening? And throughout this entire thing, Robinhood leadership did not tell the community anything. The leadership did not tell insiders anything. So I had no idea what to be telling my friends, no idea what to be telling my team. And honestly, just being an insider at the time was really, really terrible. Because you put your entire reputation on the line to join a place like Robinhood. And it's just incredibly frustrating when leadership just completely puts you in the dark. So one of the people that reached out to me at that time was my current co-founder, Jeff. And a little bit after that incident happened, both of us just sat down and were like, okay, what actually happened here? How could this have been done in a much better way? And the fundamental issue that we realized is that it was just one or two dudes calling the shots in a closed room at Robinhood, right? Completely centralized entity. No one else really has any idea what's happening behind the scenes. And we thought that was the fundamental problem. So I mean, just given the initiation that I've had into crypto at the time back in 2017, I was like, well, I mean, if the problem here is just everything is being done in a centralized way, what if there was some way to do this in a decentralized way instead, where everything was done in a trustless fashion, so you didn't need to trust like two dudes sitting in a room to do what's best for you. And that was the original inspiration for us. So we originally set out trying to build a decentralized exchange. This led to us looking into all the crypto infrastructure we could use to build a decentralized exchange. We ultimately realized that infrastructure is lacking for exchanges. And that has led to what is now Sei. So Sei is a general purpose layer one that is optimized for trading. And internally, we have just one core thesis, which is that the fundamental use case for blockchains is the exchange of digital assets, right? Every single application in crypto right now is either directly or indirectly a trading application. So for listeners, if you're familiar with Uniswap and OpenSea, those are exchanges where you can trade either spot assets or NFTs. And these are very clearly trading applications, right? You go there, you trade these assets, you're good. Then there's also crypto games. So one example would be STEPN. STEPN is a game, and they have an in-game marketplace. So even though it's a game and you wouldn't traditionally think of it as a trading application, most of their activity, like most of their on-chain transaction activity, actually ends up being the in-game marketplace. And this in-game marketplace, I mean, you can trade fungible and non-fungible tokens, and it's essentially just a trading application, right? So games of the Axie style, STEPN style, they're just trading applications as well. Even MetaMask, which is a crypto wallet, right? The core reason that people install MetaMask is so that they can then go on-chain and start trading. So even MetaMask is a trading application. So everything in crypto is a trading application, and it's becoming clear that there's very strong tailwinds that are pushing more and more activity to start happening on-chain, right? So if you've been following along with everything that's happened in the past year with centralized exchanges, there's been like FTX, for example, which was one of the biggest blowups ever. And FTX and 3AC, a lot of the other centralized entities that blew up, they've led to much more stringent regulation that lawmakers are either passing or considering to pass. And the end result of that is that all of the trading activity that otherwise would have got to centralized exchanges, a portion of that is now going to get routed to decentralized exchanges and to start happening on-chain instead, right? Beyond that, there's also just much more of a focus on tokenization of assets. Like crypto is organically year over year just becoming more and more just widely adopted. So there's very clearly trading applications that are important. There's more and more activity that is going to start happening on-chain, on these on-chain trading applications. So then the question is just, how do you help these on-chain trading applications scale, right? How do you help them grow? And that's what Sei spends all of its time thinking about. And the core promise that we make to teams that are building on Sei is that you can focus on user acquisition, and we will focus on building the best infrastructure for you. And that's resonated with a lot of teams at this point. There's over 150 projects that are building on Sei. And Sei is currently in a public testnet period and is going to be launching on mainnet pretty soon.
Funny you mentioned 2017. That was, for many of our listeners, a seminal year for crypto as well. It's kind of the year that crypto hit the quote-unquote big time for a lot of our audience because, of course, that's when we saw the listing of more traditional finance products in the crypto space. The SIBO with their futures and CME, of course, with their futures. A lot of people, of course, point to that as the beginning of the first crypto winter because now you had an actual vehicle where you could actually reliably sell Bitcoin for the first time. So that kind of was contentious. Of course, this show launched shortly thereafter back in the early days of 2018. So an intriguing time to start talking about crypto here on the network. But, you know, we've been doing it for a few years here now on the show, Jay. We've had a lot of guests come on extolling the virtues of, let's say, yet another exchange in the derivative space or just a decentralized exchange in general. We've also had many people coming on talking about their various layers and improvements to the blockchain and how they can make something hyper-focused for the trading audience that is uniquely and specifically addressed to them. You kind of talked about it a little bit there, but I'm curious, you know, for our audience who are coming in looking at it from the trading angle, what is it that makes Sei Labs intriguing? Is it really, at the end of the day, just the the speed improvement that you're offering to all the projects on your blockchain? What is it that's really setting you guys apart?
Yeah, of course. So when we were originally trying to build an exchange ourselves, we started looking at all the infrastructure we could use, right? So we started looking at every layer 1, every layer 2, hybrid solutions. So basically all the infrastructure that we could conceivably use. And that's when we started noticing what we called internally as the exchange trilemma. So between decentralization, capital efficiency, and scalability, every exchange that we saw out there only had 2 of the 3. So for example, if you're familiar with Uniswap v2, that has decentralization and scalability, but not capital efficiency. It's extremely inefficient from a capital perspective, which is why the Uniswap team actually created Uniswap v3. And Uniswap v3 is decentralized and capital efficient, but it's not really scalable. And then you have like the centralized exchanges like Binance, and these might be scalable and capital efficient, but they're not decentralized at all. And we realized that, people have been spending the past several years just trying to build new types of exchanges by iterating on exchange mechanism design, right? Like going to Uniswap from Uniswap v2 to Uniswap v3. In the future, there'll be Uniswap v4. We do not think that is the solution, right? If you look at how innovation typically works, there's this idea of application infrastructure cycles, which is that there's some infrastructure that gets created, which leads to new types of applications. Some of these applications find product market fit, and then they need more specialized infrastructure to get created for their specific use case. So one example of this that we can look to is the database industry. You started off with solutions like Oracle getting created. This led to all the Web 1, Web 2 applications that we use today. And now for more specific type of use cases, we're starting to see more specialized infrastructure. For example, there's Databricks Warehouse, which is tailor-made for AI and ML, right? We think the exact same thing is going to be happening on-chain. So there was initially Ethereum. This led to several different types of decentralized applications. Most decentralized applications have no semblance of product market fit right now, especially once you take away their token-based incentives. So they don't really need more specialized infrastructure right now because they don't actually have real demand. But exchanges have very, very clearly found product market fit at this point, right? Exchanges are like the only thing that truly have product market fit in crypto. And that's why Sei is creating specialized infrastructure for these exchanges. Now, the question then becomes like, what does that specialized infrastructure look like, right? So we originally got started and we looked at all the other infrastructure that is there on the market. So we looked at Solana, we looked at Ethereum, we looked at building rollups, we looked at using like Avalanche or something. And then we also saw like what Aptos, since we were doing back at that time. And it became clear that there were a few different things that were really lacking from the current infrastructure side. The first is time to finality, or in more layman's terms, latency. How fast is the chain in terms of finalizing transactions? And I'm sure everyone over here, all the listeners over here can definitely empathize with lower latency leads to more capital efficient and just more, market maker and retail friendly systems. And if you look at Ethereum, for example, it's just extremely slow. Even Solana, you might think that it's fast because it has this shorter block time of 600 milliseconds. But in reality, for any of these consensus mechanisms where a block is not immediately finalized, but is instead finalized after there's a certain number of blocks that have been added, that inherently leads to the possibility of reorgs. So a reorg is when a block is added to the network, but then a different chain ends up becoming longer, and then that other chain is the one that's considered the canonical chain, and then that block that was a reorg block gets dropped. And if you think about this from a market making standpoint, it just introduces a lot more risk, right? Let's say you're a market maker, you want to open a position on Ethereum and then hedge it off chain. How would you do that, right? Well, one approach is you could open the position on chain, and then as soon as that initial block is added, so before it's actually finalized, you could hedge it off chain. But the downside there is that if that block gets reorged, then guess what? You're left holding your off chain position, but your on chain position is just no longer there. It might get filled at a different price in a subsequent block. And this means that you are just taking losses. And the way that you account for this is by offering wider spreads, which leads to a worse user experience. An alternative would be to just wait until the block is finalized, and then you can hedge it. But if it takes, let's say, 60 seconds on Ethereum for the block to be finalized, then that's 60 seconds of price volatility that you as the market maker are eating. And if there's, let's say, 5 bips of price movement that happens, then you are eating that risk, and you account for that by offering wider spreads. So lower latency is critical, and Sei decided to focus on offering the most performant, lowest latency system possible that you can do in a decentralized way. One of the other things that became clear is that throughput needs to be improved, right? And that's why I say throughput is basically how many transactions or orders can be placed every single second. So what Sei did is we made a bunch of optimizations to the chain level to allow for up to 20,000 orders per second to get processed, which is a magnitude more than most other ecosystems. And the last thing that we noticed is that the user experience is definitely quite clunky when you're trading on chain. So Sei added in a native order matching engine, which is essentially a primitive that is built into the chain itself. And anyone that makes use of that can benefit from things such as frequent batch auctions that help prevent or that help ensure price fairness within a block, and that also help with preventing MEV. So, I mean, high level, those are some of the things we did. Happy to do more of a deep dive into any of them as well.
I'm glad you mentioned throughput and just scale in general, because that's always been an issue. We've debated that many times, even recently here on the program. Way back in the crazy days of 2017, we all heard a lot of great promises about blockchain and how it was going to revolutionize everything in the capital market space. We saw a ton of startups spin up, claiming they were going to bring that technology and apply it to relatively antiquated things in the trading realm. We were going to see a variety of exchanges springing up around that technology. Of course, you listen to some of the early episodes of this program. We had a lot of guests talking about all of that. You know, fast forward here into 2023, and the conversation has now shifted a bit. A lot of our recent guests even kind of admitting that, you know, a lot of that early hype around blockchain, especially when it comes to this audience, to this market, the financial marketplace, it's just not quite ready for prime time yet. It can't really scale to the levels and handle the transactions that we're talking about, let's say, in a traditional options market, for example. You're talking about trades going up in milliseconds. You're talking about tons of messaging going up, being transferred all over the place, and just a lot of data, a lot of transactions being processed all in a very, very fast period of time. And we just have not seen blockchain able to scale up to meet those demands. But it sounds like, Jay, you're maybe a little bit more optimistic than some of our other recent guests. I mean, 20,000 transactions, it's still a long way to go, but obviously it's a lot better than the level we were talking about back in, let's say, 2017. So it sounds like from your perspective, you think maybe with a little bit more tinkering under the hood, blockchain could potentially be ready for prime time, at least from a financial markets perspective.
Oh, 100%. Yeah. And I mean, I think the way that we think about this is that scaling is a privilege, right? Most infrastructure in crypto right now is not getting any adoption, like isn't getting the kind of adoption you would even need to justify scaling, right? Like outside of Ethereum, there's really not any ecosystem. And I mean, this is definitely arguable, but there's not any ecosystem outside of Ethereum and Bitcoin where scaling is actually an issue. In most cases, the actual issue is just user adoption. Because the fundamental thing is the fundamental approach that most infrastructure projects in crypto take is they typically just tend to be a bunch of really strong engineers who are like, okay, we want to just go and build this really shiny new infrastructure. And user adoption, distribution, these are all things that come second. The primary thing is just building this new infrastructure. And I think that's one of the things that's led to a lot of infrastructure projects in crypto not really taking off. It's just because from the get-go, there's not really that focus on community building and user adoption. And I think that's one thing that has led to a lot of success from Sei's side, which is why there's over 150 projects building on Sei, why Sei's community is also quite large, especially given that it hasn't even launched on mainnet yet. I think from the get-go, Sei's primary focus has been on community building and attracting the best possible developers to come and build on Sei, right? Because at the end of the day, infrastructure is only popular. It only ends up being successful if there's a strong community that gets built. And communities only get built from normal users, people like you and me coming on and enacting and engaging with that infrastructure, right? And I mean, the only reason people come on is if there's killer applications, if there's actually like fun shit to do on chain. So from Sei's side, the biggest push that we've been having is just getting really, really good developers to come and start building on chain. And there's multiple programs that Sei is starting to just be as friendly as possible for developers. One of these is a $120 million ecosystem and liquidity fund. So any developer that wants to start building on Sei and that is getting traction, they have $120 million that investors and market makers have put aside to both invest in these projects and to provide liquidity, which is massive. No other ecosystem really has anything like that. One other thing is Sei has an entrepreneur in residence program. So this is a way for any really solid founders that might not have an idea yet, but that are exceptional in their previous kind of work experiences to get started building on Sei. They'll be getting paid a salary, and then from there they can get their team together, they can get an idea together, and Sei Labs will help with every step of the process. And there's also hackathons that are being organized now. So in the next few months, there will be an AI-focused hackathon for how to have AI-focused applications getting built on, Sei, either completely natively on Sei or having some hybrid component with some portion of it happening off-chain and some portion happening on-chain.
A lot more I want to get to. We are kind of coming up against it. And also, you are joining us on a very interesting day here, Jay. So I'd be remiss if I didn't get your thoughts on this as well. Of course, you mentioned at the top of the show the FTX debacle. Last year, a lot of that kicked off by the back and forth between Binance and FTX. And now, of course, we're seeing today the SEC coming down on Binance, getting a lot of other people spooked out there in the crypto space. And when we start breaking down the numbers in a little bit on the show here, listeners, a lot of red on the screens this week as a result. But Jay, this has been an interesting discussion point for a lot of our guests ever since FTX. The line of demarcation between centralized and decentralized finance out there. For a lot of people, as you mentioned at the top of the show, for a lot of people, they saw FTX as really a failure of centralization. And they thought, let's just remove this from the hands of, I think you put it, the two people in a room, and let's get it out there to the peers and let's solve it through the decentralized fashion. A lot of people in the traditional world of finance have said, no, this is an example of where we need more centralization and better regulation, and that will solve the problem as a result. So it's been an interesting debate to watch unfold post FTX. Now we get to add this wrinkle, this new layer of whatever's going on between the SEC and Binance today. So I'm curious for you, Jay, as someone who's firmly entrenched in the decentralized world, what are your thoughts on what we're seeing today? And do you think perhaps this will drive even more traffic to the decentralized finance route down the road?
Yeah, so I can't really comment on Binance versus the SEC specifically because I don't have, I guess, enough information around that. With that being said, I think that anything where there's this big centralized crypto player that is being attacked by regulators, it leads to short-term negative. I guess it just ends up being short-term negative for crypto overall. But I think long-term, it ends up being extremely positive because the core, in my opinion, the core value proposition of crypto is trustless systems, right? There's no more like, trust me, bro, just don't worry about the funds you've deposited. I'm going to take care of them. And it instead becomes completely auditable, permissionless, trustless. And that's a core value proposition, right? And the more centralized blowup that end up happening, just the better it ends up being for decentralized technology in general. So, I mean, if anything does happen to Binance, that's going to be short-term extremely negative. Because Binance is the biggest centralized exchange in the world right now. So it is more or less one of the most important players in the crypto space. But I think long term, it will lead to greater adoption of just decentralized technology in general. So whenever these kind of centralized exchange or centralized blowups happen, from Sei's standpoint, we don't get too concerned. And we've just been seeing more and more adoption happening. Just because I think the value proposition becomes more and more clear as centralized entities are hurt.
Well, Jay, I appreciate you joining us today. We have to keep on rolling with the program. But before we do, we like to leave our audience wanting a little bit more. You've already touched on some of the things you guys and gals are working on over there at Sei Network. But before we roll out of this segment, if you want to leave our audience with any hints, any teases of what they can expect coming down the pike from you and the team over there at Sei Labs, now is the time, sir. The floor is yours.
Yeah, I think the biggest initiative is going to be the mainnet launch. So before mainnet, there's a incentivized testnet period going on, which is a chance for everyone to play around and get their hands dirty on Sei. If you're interested in learning more, you can follow Sei Network on Twitter. So SEINETWORK. A lot of resources over there, and you can just get more involved with the community.
There you go. Give them a follow over there. Sei Network, SEI Network, all one word over there on Twitter. And Jay, we'll keep an eye on all these developments. We'll have to bring you guys back on down the road to discuss them in more detail.
Awesome. Thank you so much for having me on, sir. This is fun.
All right, listeners. And now it's time to keep on rolling right on into the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, listeners, welcome to the Bitcoin Breakdown. Fascinating discussion. Hope you folks enjoy it. There's a lot going on under the hood of the crypto space these days, and we like to share it with you folks out there. Of course, what's going on out there in the big BTC markets? A lot of red, like I mentioned earlier in the episode. When we last chatted, which listeners remember was 2 weeks ago now. We were off last week here for the Memorial Day holiday in the U.S. So going back 2 weeks now, we were hanging out a wee bit north of the 26K level, 26,888 to be precise, coming back into the show today, 25,612. So down 1,200, close to 1,300 handles over the course of the last 2 weeks. Of course, that's a long time. So in between, we saw an interesting range out there. Not as high as you might expect. We got up a little bit north of 28,000, 28,178. That was the high. And then the low came pretty much today, right as we kicked off the show, 25,612 out there. And I'm sure if we react it right now, it would be even lower. Of course, all this driven down by just the headlines going on out there in the world of all things crypto, in particular SEC, coming after Binance. Many saw Binance as potentially a white knight post FTX. Others saw them as perhaps the agitator, the catalyst that precipitated the meltdown of FTX when they were having some fun, shall we say, with all the FTT tokens out there. Well, coming into the show today, we are seeing a little bit less vol on the screen, which is kind of intriguing. Again, it's been an interesting couple of weeks out there. I'm sure if we react this again, maybe a little bit later today, we would perhaps see a little bit more vol popping into the space. Remember, all this data coming at you courtesy of our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires out there. You're going to see all this data we're going to talk about and the show, and quite a bit more, quite frankly. So yes, just stay tuned. There's a lot going on out there, but it has been intriguing to watch just in the last 24 hours what's been going on out there in the crypto space. Obviously, these headlines breaking, crypto selling off, vol firming up a little bit out there. Was a little bit lower earlier in the session. Now, again, in 36.25. That's still down from about 43.5 on our last show. So vol still coming in, getting to some fairly anemic levels for crypto. Again, we've seen Bitcoin, certainly ETH, well over triple digits in the past. So this roughly 1/3 of that level starting to get fairly low. Then again, we've been saying that across the board. We just had a poll, a question of the week, which many of you participated in last week on the network, where we asked you some of your favorite trading names out there. Apple, Tesla, S&P, Microsoft, all at or near 52-week lows from a volatility perspective. So kind of a pick your poison where you want to go buy some volatility right now. Maybe you want to buy it in Bitcoin. Maybe you think the vol has come in enough. We are starting to head into that portion of the year, the summertime frame, where, vol sometimes goes to die. So seasonally, this isn't entirely surprising what we're seeing out here, but nonetheless, not a lot of vol to be found on the screen out there. So what does that mean if you're out there selling a lot of premium from an options perspective in things like Bitto or out there in all the other Bitcoin options venues? Let's say you're one of the lucky few who can trade on Deribit. Well, then you might want to keep your powder dry a little bit right now. You're not getting paid a lot for the risk you're taking out there. If we go a little bit farther down the term structure, we can see that the vol also coming in there. On our last show, if we go out 6 months on the Bitcoin term structure, the vol was a little bit north of 47, about 47.30. Coming into the start of the show today, 42.5, so down nearly 5 points there as well. So even longer term vol, which is where you can usually find a little bit saner, cooler, calmer heads out there that can look at things with a little bit more reasonable perspective versus The 30-day vol, it's bouncing all over the place. Even that, the ball's coming in fairly aggressively out there. Let's go out to the skew and see if we're seeing some evolution out there. And spoiler alert, we are. On the show last week, we were -1, which is close to flat. Slight bias to the puts, which means there was a slight downside bias out there, but not much, really. Coming into the show today, that skew is really starting to fall. -2 when we kicked off the show. And if you look at the chart here on Amber Data listeners, you'll see it was pretty much flat coming into this morning. And then all this Binance news really started crushing the near-dated portion of the skew. In fact, the weekly skew, we don't talk about it on the show, but the 7-day skew, it was a +2 starting the day this morning. It has already swung to a -5. So that's come in 7 points. The 30-day skew has swung markedly negative as well, which, again, understandable. We're seeing a lot of negative headlines. We're seeing Bitcoin plummet. You're going to see puts light up the tape in those environments. And you're going to see the skew swing toward the negative. So that is pretty much what we're seeing. -2 right now. Be interesting to see if we get much lower than this. Obviously, the 7-day vol, the 7-day skew is looking even more dire. So it's something we'll keep an eye on. It's already ticked up since we racked this at the beginning of the show to about a -2.5. So it's already continuing to look more negative. And again, as these headlines continue to play out, we'll see that reflected in the skew going forward. Going out, again, 6 months trying to find that saner, calmer head out there. And you're not seeing as much of a reaction there, getting back to what our guest Jay was just saying. Sometimes these headlines result in some very short-term trading blips. Longer term, the vol, it was flat on our last show 2 weeks ago, and coming into the show today, it swung slightly negative, about -0.5. Nothing crazy out there. So it doesn't seem, at least for right now, like the markets are going into a tailspin longer term over this. We'll keep an eye on this. If these charges start to have a little bit of weight to them or other things are uncovered, that could certainly change. But for right now, it seems like longer term, people are still kind of shrugging their shoulders over this news. Of course, since our last show, we saw May roll off the board. We all know expirations take a lot of OI with them, listeners. So we are seeing most of our OI numbers over there on Deribit down from our last show. Coming into the start of the show, we had 194,000 calls open on Deribit. That's down 18,000 from this time 2 weeks ago. On the puts, 90,000. That's only down about 1,000. So that one's actually close to unched. So kind of interesting. Still hanging out at that roughly 2-to-1 calls over puts level that Deribit Bitcoin options have been hanging out at since time immemorial. They don't seem to want to budge. Let's get out to the movers and shakers from a size position perspective to see what strikes are gaining, which ones are losing out there over the last couple of weeks. And since our last show, we've seen the 28,000 calls move into the pole position. They've gained about 4,300 contracts net over the last couple of weeks. And again, we did kiss that strike ever so briefly in the intervening period. So it makes some sense that one might be moving up. Then right behind it, number 2, we have the 32,000 calls. They gained about 2,100 contracts since our last show. So that's kind of interesting. Pretty far out of the money paper. And then number 3, remember I said it's not just calls all the time. Puts can sneak in here too. And number 3 reflects that. 26,000 puts. They've gained 2,000 contracts since our last show. So again, not surprising. Given all the, I'm sure if I went and looked right now, I'd maybe a good chunk of that has been in the last 12 hours because we have seen a lot of negative headlines driving a lot of put activity. So intriguing stuff out there. The rest of it is all calls, though. Number 4, 30,000 calls. They gained 1,900 contracts since our last show. And rounding out the top 5, the 34,000 strike calls. They gained 1,700 contracts since our last show. Let's get out to the vehicle I know a lot of you like to use to trade yourselves a little bit of the old BTC, certainly from an options perspective. That is BITO, our old friend BITO. We were talking on our last show 2 weeks ago about how many puts are open on the 8 strike and all these other strange 5 strike, strange strikes open on the BITO size position front. Well, let's get out there today. I have a feeling we're going to see a little bit more paper on the tape out there today as well. You know, this has been an interesting conundrum for me. Why is BITO volume and ADV kind of falling off a cliff? When we were talking about it a few months ago, the ADV was threatening 100,000 contracts a day. It's down to 33,000 a day now, down another 5,000 since our last show. Again, some of that is seasonality, summertime, not usually a banger time for options volume. So intriguing stuff to be had. BITO kicking off the show is at about a 1430, puts it down about 1.2 points. It's dropped a little bit since then. It's down to about 14.25. So it's down about 1.25 points since our last show 2 weeks ago. Again, numbers starting to hit it out there today. So that's good because the ADV is 33,000. We're already seeing 66,000 contracts on the tape today. So hopefully by this time next week, maybe we'll see that ADV move in the other direction. It's a shame that it takes an event like this to make that happen, but sometimes that's the way options work. Vol-wise, we had seen BITO coming back in down to about a 43. That's down about 6 points. I'm curious if I re-racked that right now. Yeah, it looks like it's still about that level, which still puts it around the second percentile. So again, going back to what we were just talking about, it's a vol bargain in a lot of these names right now. So if you're a hardcore premium seller, maybe you want to look elsewhere, keep your powder dry. If you can handle buying an option or two, you're not going to get better deals too often than you're seeing out there from a vol perspective, at least for right now. Let's get out to some of those top positions. Let's see. What is open in BITO? What are people up to out there? Let's do a top 10 because it's always fascinating to see what's open out there in BITO. Number 10, we have 14,000 of the Jan 20 calls. Number 9, 15,000 of the Jan. Those are Jan 2025, by the way. Those are pretty far out. Number 9, we have 15,000 of the Jan 2024 20 calls. So someone has an axe to grind on the 20 strike in January for the next couple of years. Intriguing. By the way, 8-2 calls over puts in our top 10 in BITO right now. Kind of been hanging out at that level for some time, and it remains that way this week. Number 8, 17,000 of the June 5 puts. Again, some intriguing put strikes open for size out there. Number 7, 20,000 of the Jan 18 calls, Jan 2024. Number 6, 25,000 of the June 8 puts. These are end of month June 8 puts. So again, intriguing put strikes. 8 puts. Interesting. I know we saw for a while a lot of interest in the 10 strike. That seems to have been replaced by farther out of the money puts. Number 5, 26,000 of the Jan 15s. Number 4, 30,000 of the Jan 2025 35 calls. Say that one 5 times fast. Number 3, 34,000 of the Jan 65s. And then the rest are all Jan 2025 listeners. Number 2, 34,000 of the Jan 2025 25 calls. And taking the top spot yet again, 47,000 of the Jan 2025 30 calls. So long-term upside open for some size here, including you like those 65s going out next January, listeners? That would be intriguing. What would it take to get BITO up to the 65 level? In terms of action today, because obviously given all the headlines, we're seeing some paper lighting it up today. The big dog today are nearly 9,000 of the June 14 half puts expiring this week. So formerly an at the money, now slightly in the money put, going up for size about 9,000 times this week, all opening. So people opening up a lot of put paper in BITO. Go figure. Bad headlines, BITO, Bitcoin plummeting, folks diving into some near-dated puts. That's pretty much about what I expected. That gets back to what I was saying earlier about that very near-dated skew number looking very negative. That's along these same lines. People are playing very close to the fire here in terms of expiration with these contracts. Number 2, we have the June 14 puts expire this week as well. About 5,000 of those. And number 3, we have 4,000 of the 13 half puts also expiring this Friday. So it's just a slew of weekly at the money and out of the money puts going up out here in BITO, which again is kind of what you'd expect. And also, just in those 3 alone, you're talking nearly 20,000 contracts. So nearly a full day's worth of paper just in those 3 contracts trading right now. So intriguing stuff. Speaking of intriguing stuff, let's get to some more of it, a little bit of the old altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show where we break down everything outside of the big dog, which is Bitcoin, except for right now when we talk about your top 10 from a market cap perspective. And a lot of red on the screen again this week. I wonder if we rack this every few minutes. Might see a little bit of a shakeup, a little bit of a different number here, but intriguing stuff to be found nonetheless. What's intriguing also is that we have seen a lot of red out there, but the general makeup of our top 10 hasn't really changed too much. Number 10, we have Polygon, 7.8 billion. So again, the last show, we were a little bit north of 8 billion to break into the top 10. A little bit lower than that this show, but not falling off a cliff by any means. Number 9, Solana, just a tick under 8 billion. Number 8, Doge. Doge has been locked. It has a death grip on the number 8 market cap spot for whatever reason. $9.25 billion there. Number 7, we got Cardano, 12.2 billion. Number 6, XRP, 26 billion. We saw some headlines, saw some optimism in XRP over the past week. People thinking, hey, maybe this is it. Maybe the SEC is finally going to render some sort of verdict on this. No, instead they went after Binance. So maybe some of that optimism fading a little bit. XRP still hanging out around 50 when we kicked off the show, which doesn't really put it that big of a move from our last show, but a good for a little bit north of 26 billion worth of market cap. Number 5, USD coin, 28, almost 29 billion. Number 4, BNB, 42, almost 43 billion. Intriguing there. Number 3, Tether, 83 billion. Number 2, it's ETH, 217 billion. And number 1, the big dog, Bitcoin, just a little bit shy of $500 billion, 496 billion worth of market cap, listeners. Let's get out to number 2 from a market cap. Number 1 in a lot of your hearts, it's ETH. And you know what? ETH not taking the slings and arrows that Bitcoin has taken this week. On our show last time, we was 1821. Coming in to start of the show today, 1807. Down a whopping almost 14 handles from where we were this time last show. Of course, did a little bit of living in between there. The high came Sunday last week, 1917. That was the high, and the low came on Wednesday, May 24th, 1779. So interesting range out there, but net settling out pretty close to unchanged from where we were this time 2 weeks ago. That means the vol also literally unchanged. It was a 43 in our last show, 43 right now. So very interesting that a lot of this consternation about Binance not really spilling over into the ETH market, which is very interesting. Usually pull that plug, the tide falls and it sucks all the boats down with it, right? We're not seeing as much of that in ETH, which is kind of interesting, maybe showing a little bit of differentiation out there in the crypto space, which is good to see amongst the traders out there. And of course, that's something we've said as well many times. Bitcoin is always going to be the standard bearer. It's always going to suffer the slings and arrows, whereas some of the others maybe can stand behind it and bask in a little bit of that protection. That maybe some of that going on out there today. If we go a little bit farther out, we go, let's say, 180 days. We were at 30-day vol before. 180 days, we're seeing the vol actually come in a little bit. We actually come in quite a bit, which is kind of interesting as well. On our last show, it was nearly a 49. It was a 48 3/4. Right now, 39 3/4. So coming in a whopping 9 points on the longer-term volatility. So that's very interesting. Something is crushing the longer-term vol in ETH. That's intriguing. I need to go dig in and see what's going on out there. Maybe some premium harvesting strategies going on over the past 2 weeks. Either way, something sucking all the air out of the balloon going out 6 months in the ETH term structure. Skew-wise, something similar playing out to what we're seeing in Bitcoin. Last show, it was a little bit negative, -2. Coming into the start of this show, almost double that, almost -4. Again, you can't escape all the headlines out there. Go a little bit farther out. You go 6 months out on the term structure. The skew is pretty much unchanged. It was -1.4 in our last show, -1.5 now. Kind of intriguing to see that given how much vol has come out 6 months down the road. But hey, intriguing stuff out there in ETH land. I remember May rolled off the board since our last show, so the OI mostly down since our last show as well. We got about 2 million calls open on Deribet. That's down about 100,000. And we got about 745,000 puts. That's down about 88,000. In terms of the movers and shakers out there, what are the positions that have the biggest OI gains or losses since our last show? Number 5, we have the 1,900 calls. They gained 20,000 contracts since our last show. Number 4, the 2,200 calls. They gained about 22,000 contracts. Number 3, got puts slotting in at number 3 on both names this week. That's kind of interesting. The 1,800 puts, they gained 23,000 contracts from an OI perspective since our last show. Number 2, the 2,000 calls, they gained 35,500 contracts. And the big winner since our last show, the 2,300 calls, they gained 37,000 contracts since our last show. So a ton of upside action north of 2,000, which is intriguing considering we didn't really get that close to that. We got to a little bit north of 1,900 ever so briefly, and that was a while ago. So intriguing stuff out here. Before we get out of here for this week, let's run the table on some of the other altcoin out there, listeners, see what's going up. And not a lot is the answer, quite frankly, since our last show. We had Solana. It was about 19 3/4 on our show last time. 2010 when we kicked off the show. This week's up about 35 cents. Not a huge move out there over the last couple of weeks. XRP, like we mentioned, there was some optimism. It seems like most of that has kind of mitigated. It was about 46 cents on our show 2 weeks ago and about 50 cents today. So you're gaining 4 cents. That's not nothing. I'm sure XRP bulls will take it, but it's certainly not the explosion of effervescence that people are looking for when and if this SEC issue is actually settled once and for all. Everyone's favorite Dogecoin, 7.3 cents on our last show, 6.6 cents this show. So coming in a little bit since our last episode. Litecoin, 87.16 today. Last show, 91.14. So down almost exactly 4 handles on the week. Let's run through some others and get out of here for this week, listeners. Cardano, almost 35 cents on the show this week, about almost 37 cents last show 2 weeks ago. So down about 2 cents on the week. Polkadot, a little bit north of $5 today and about 5 1/3 on our last show. So down close to 1/3 of a dollar over the last 2 weeks. And let's get out of here. Let's get to a little bit of the old Shiba. It was a whopping 0.000008 on our last show. Coming into today's show, 0.000079. So there you go. Huge move out there. All right, listeners, that is going to do it for the Crypto Rundown this week. Quite the show. A lot of different topics coming up here on the show this week. I want to thank our guest, Jogue, the co-founder of Sei Labs, for joining us on the program today. Give him a follow if you haven't already, at Sei Network, SEI Network on Twitter. A lot of folks following that handle, so a lot of folks intrigued by what they're cooking up out there. Also, throw some love to our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. If you like this data, we really just scratched the surface of it here on the show. There's a lot more going on under the hood. amberdata.io, the place to go to find out more. That's going to do it for us on the network today. Back again tomorrow with another great pro Q&A. Our old buddy, Mr. Simon Ho, the Spikes father himself, joining us from across the pond to Australia. And that should be a fun one. I haven't checked in with him in quite some time. He'll talk, of course, crypto volatility, also equity volatility. It's about anything volatility and skew. He's happy to talk about there. So all our pro folks, start getting your questions in now. He's always a great guest to have on there. Wednesday, of course, for all of you listening who are maybe a little bit new to the world of options, check out our Options Bootcamp program. Airs live on Wednesday for our pro members. All you podcast listeners, you get it on Wednesday as well after the fact. So check out Options Bootcamp, a great place to go to get a little bit more familiar with these crazy things we call options around here. Thursday, This Week in Futures Options, another show where we talk about crypto, this time from a centralized viewpoint, what's going up over there on CME, as well as, of course, episode 2 of the Option Block. Friday, volatility views, and for all you cool cats in the secret club, back again for Options Oddities, and then back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.